Assalamu alaikum and welcome to Educare. So today we are starting the kit practice. The first question is Jason. You should assume that today's date is 15th February 2022. Jason is currently employed by Initial PLC as a sales manager, but he is considering resigning on 14th March 22 and taking up an offer of employment with subsequent PLC, which would commence on 15th March 2022. If employed by subsequent PLC, Jason will receive a higher base salary and more benefit compared to if he remains employed by Initial PLC. However, Jason wants to know how much more income tax he will have to pay for the tax year 22-23. Should he take up the new offer of employment? The following information is available in this regard for the tax year 22-23. So first it is about Initial PLC. If Jason remain employed by Initial PLC, rather than taking up the offer of employment with subsequent PLC, he will be paid a gross annual salary of 1,80,000. So this is the salary in Initial PLC. Jason will contribute a total of 8,000 into Initial PLC occupational pension scheme. Remember that this is Jason, means employee is contributing in occupational pension scheme. So if employee is contributing into occupational pension scheme, then it means that it will be deducted from total income. So whatever is the salary 1,80,000, it will be reduced by the employee's contribution of 8,000, right? So next is in addition to his salary, Jason expects to be paid the following bonuses by Initial PLC. We have been given the date of payment, date of entitlement, and in respect of the year ended. So we have to give priority the date of entitlement. In case of amount received on 15th March 22, this date lies in the current tax year. 6th April 22, date of starting of our tax year. 5th April 23, date of ending of our tax year. So this bonus will be recorded as taxable income. Then throughout the year, Jason will be provided a free meal in Initial PLC staff canteen. The total cost of these meals to the company will be 1440. Free meals in the staff canteen are available to all of the Initial PLC's employee. So whatever benefit has been provided to all employees is a exempt benefit. Whatever benefit is provided to all employees is a exempt benefit. Next is about subsequent PLC. If Jason takes up the offer of employment with subsequent PLC, then he will be paid a gross annual salary of 2,05,000. So this is to be included in his taxable income. Subsequent PLC will contribute a total of 9,000 into the company's occupational pension scheme. So here the company is contributing into the occupational pension scheme. It is not the employee himself. It is company that is contributing into occupational pension scheme. So what we have to do? This is said to be the exempt benefit, and you have to record 0 for this. Remember that who has contributed is an important. If employer is contributing, this is an exempt benefit, and if employee is contributing in occupational pension scheme, this will be deductible. Next, throughout the tax year of 22-23, Jason will be provided with a hybrid electric car which has a list price of 62,500 and an official CO2 emission rate of 25 grams per kilometer. It has an electric range of 25 miles. Jason will not be provided with any fuel for private journey. So what we have to consider? We have to consider that what is the rate that is given in the table. It is a hybrid car, electric car, and has a CO2 emission between 1 to 50 grams. So we need to consider what is the rate mentioned for this car. So its electric range is 25 miles. On the basis of his electric range of 25 miles, we have to identify the rate. So Further thing, the Jason will not be provided with any fuel for a private journey. Next, for the period 6th April to 31st July, this is the period of 3 months. 6th April to 31st July, this is a period of 3 months or 4 months, April, May, June, July. Subsequent PLC will provide Jason with living accommodation in a property purchased by the company in 2012 for 1,40,000. The property will be valued at 2,85,000 on 6th April 22. Improvement costing 17,000 were made to the property during August 2022. Annual value of property is 4,800. So we have to consider this 4 months benefit. For basic charge, it is 4,800 multiplied by 4 by 12, because this accommodation is provided for the period of 4 months only. Then we have to consider about the expensive accommodation charge. Remember that if the accommodation has a value of more than 75,000, then 2% of this will be provided as expensive accommodation charge. Another point to be noted that this property has been purchased by the company in 2012 and provided to the employee in 2022, so that more than 6 year periods has been elapsed. So if more than 6 years period has been elapsed, then we have to consider the market value rather than original cost plus improvement. Rule is, if the property is purchased by employer and after purchasing this property 6 year periods had been elapsed, then in that case we don't consider about the original cost plus improvement, we will consider the market value. So here we need to consider 2,85,000 rather than 1,40,000 plus improvement. So this will be 2,85,000 minus 75,000. This is the amount of 2,10,000, and we have to consider 2% for the 4 months period. This is the benefit for the employee for this tax year, right? So what is the rule? To find out the expensive accommodation benefit, we have to deduct the 75,000 from the market value or whatever the original cost we have to consider as per rule, and difference of this will be recorded at the rate of 2% as the benefit of employee. And as this year this benefit is provided only for the 4 months period, so that is why we have considered or time apportion is for 4 months period. Now on 1st August, subsequent PLC will provide Jason with an interest free loan of 1,40,000 to help him purchase main residence. Loan repayment will be made before 5th April. So simply we have to consider that this is the benefit for employee, 1,40,000 multiplied by 2% multiplied by 8 by 12, because this loan is provided in this current year for the period of 8 months only, right? So where possible, subsequent PLC will payroll the taxable benefit. Payroll the taxable benefit means just like pay as you earn, whatever amount has been paid by the employer has been deducted the amount of tax that is to be paid by employer to the HMRC. Same in the case of payrolling, whatever taxable benefit has been provided by employer, for this they also deduct the amount of tax from employee's income. So this is payrolling. Provided Jason to show that the related income tax liability will be collected under pay as you earn. Jason will not have any other income. So state one advantage and disadvantage for employee. Simply you have to mention what is the advantage of payrolling. Calculate how much more income tax Jason will have to pay for the tax year 22-23 if he takes up the offer of employment with subsequent PLC rather than remaining employed by an initial PLC. So this is the case that you have to identify what is the taxable benefit, what are the amount to be included in the income of employee. If you can identify this, you can easily calculate the tax liability, and in both cases for initial PLC as well as subsequent PLC you have to calculate the taxable liability, and as a result of comparing those taxable liability in initial and subsequent PLC, you can find out the answer. So let's have a look at this answer. First, it is advantage. There is no need to declare payrolling benefit on an implied self-assessment tax return. So, this is the benefit. You do not need to mention this taxable benefit in the tax return. Second advantage is employee will not have any unexpected tax liabilities in respect of taxable benefit that have been payrolled. And disadvantage, tax will generally be due earlier under pay as you earn than if tax was collected under self-assessment. Means in case you have submitted a self-assessment return, in that case you have to pay tax a little later. So, this is the amount initial PLC as we have considered. 1,80,000 the pay. Occupational pension scheme contribution 8,000 reduces the taxable amount of salary, and that is 1,72,000. Bonus, which is for the 15th March 22 date of entitlement, 15th March 22, is not to be recorded in this tax year because this tax year starts on 6th April 22 and ends on 5th April 23. So, for this we have to record it as 0, mention it as 0. Remember that this is important. For the 15th March 23, this is the date that lies in the tax year 22-23. So, this bonus will be recorded 24,000. And staff canteen benefit, that is to be provided to all employees, is an exempt benefit. So, again you have to mention it 0. So, this is your total employment income in case of initial PLC. In case of subsequent company, the salary is 2,05,000. Employer's pension contribution is always an exempt benefit, so we have to record it as 0. Car benefit, for car benefit, in accordance with the electric range was given to you 25. So, in this electric range, the amount to be recorded as benefit is 14%. For the living accommodation, the basic charge 4,800, and we have to take 4 months of this. So, 1,600. For additional benefit, they are provided it in working. So, this is 2,85,000. No improvement will be recorded. Limit is 75,000, means any property which has a value of more than 75,000 is your expensive accommodation. So, we have to consider this 2,10,000, 2% or at the rate of 4 for the time portion 4/12. So, this is what we have to record as additional benefit. Beneficial loan is provided on August, I think so. So, for August, this is a period of 8 months for which the benefit has been provided. So, it will be recorded as 1,40,000 into 2% into 8/12. So, that is how you have to calculate the taxable income in both cases. Initial PLC, it is 1,96,000, and in subsequent PLC, it is 2,18,617. So, now you have to calculate the tax liability for this. They have not calculated the tax liability. So, only they are considering directly the tax liability, the difference of income at the rate of 45%, because this person has a income that lies at additional rate band. So, at additional rate band they have to pay 45%. Instead of calculating your liability for 1,96,000 and 2,18,000 separately, they have netted off the amount. Whatever is the extra income in subsequent PLC, tax at this particular income at the rate of additional rate of 45% is considered to be extra tax that he has to pay in case he join the subsequent PLC.